Morning. How are you all doing? Right, my chat seems to have gone completely stuck. Weird. Anyway, morning, Stevie. Morning, Steve. Morning, John, Bellino, Adrian. It's time. Good morning. How are we doing? Right, just getting stuff ready. Morning, John. Right. So, off the back of 2 days of rubbish, haven't had much movement. As you can see, haven't really banked anything either. So, finally got some movement today. We've got the CPI figures today for the US dollar. So, first day of news this week, today at 1:30. That's the only news we've got, though. So, there's nothing much else. I might find it over there. In the wrong place. Yeah, we haven't really got much other news today apart from those CPI figures. So we'll see what happens with that. But it's difficult to tell whether we're going to get a decent move off of it because the market's a little bit jittery about the US with all the talks of this debt ceiling possibly raising and defaulting on their interest payments. So where we are at the moment with inflation, we're sitting at 5%. With 1% inflation change quarter on quarter. So it's come down very, very fast, a little bit too fast, really, in the last quarter. The forecast today is, where are we, CPI, is 0.4 change to the upside. So they're forecasting an inflation rise, but they're forecasting a core CPI drop. So it's very difficult to sort of forecast what they're going to do with it. Just going to quickly go over the news. Morning, Kate. Morning, Neo. Because we had some talk about the inflation figures and everything yesterday. So this was 5 o'clock yesterday afternoon. Williams expects inflation to ebb to 3.25 this year and 2% by 2025. So 2% is always the target with inflation, which keeps the economy ticking over nicely, keeps GDP rising nicely, keeps everything under control. So 3.25 this year. If you think about the rate that we've got at the moment coming down by 1% in the last quarter, if it comes down by 1% in the next quarter, that's going to bring them down to 4%. And then another 1% in the next quarter. So in the next 6 months, there's potential for them to be somewhere around about the 3 mark. It's going to take a lot for it to keep coming down at that rate, I think. So it means that they have really taken their foot off the gas with the possibility of interest rate rises, especially with what's going on with this debt problem they've got. Unemployment is projected to rise. So again, looking at the US dollar unemployment figures, we've got 3.4 and that's coming down. So they're expecting that to actually go up, which is what typically tends to happen when you have interest rate rises. So that's not really unexpected, but that is negative for the currency. The Fed has said that it is done, that it's done raising rates, but they do not see it cutting rates this year. So basically, this looks like it is the terminal rate, as we're expecting, 5.25, which was the upper forecast, is what they think they are going to stop at. They don't, however, foresee it dropping this year. So what that will probably do to the US dollar is kind of give it some stability and keep it stable where it is. But it means it will possibly turn into what the euro was over the last sort of 2 years, where it's not really got any strength and it's not got any weakness, and basically any other movement you get on any other currency pushes or pulls it around. So we're probably going to see a bit of stagnation coming into the US dollar moving forward. That is assuming obviously nothing else changes, which generally tends to. But so yeah, pretty stable US moving forward. White House short-term debt limit extension is not our plan. This is to do with this problem they've got with their debt crisis at the moment, not being able to pay their interest rates, interest payments. Schnabel came out yesterday. No doubt we will have to do more to bring inflation to target soon, i.e. interest rate rises, bullish euro. So I've got longs on at the moment on euro pairs, and don't see any reason why the euro shouldn't rally, basically. So I've got a euro New Zealand long on the funded account, and I've got a euro pound long on at the moment as well. So That's the euro. Didn't notice any movement in the debt ceiling negotiations to do with this debt thing. And that's pretty much it. We've had the CPI figures for Germany come out, which are the... Brian's not here, is he? Harmonized something or other. What's it do for us if you're with Feed or Crest? That's what they call that. But it's CPI. 7.2 as expected. So year on year and HICP. Yeah, so it's all the same thing. It's basically year on year expectations. That's the other interesting thing that came out this morning, Nagel. We could have gone for a bigger rate increase. So as we were looking at last week, I was under the impression that there was a high probability of a 4% rise, a 4% target for the refinancing rate last week. And I think the market had factored in a high probability of that happening. The last figures we had were sort of a 50-50. When it's a 50-50, they're usually thinking probably going to be. So we didn't get it. So this morning it's been sort of mentioned that, yeah, we should have maybe gone for a higher rate last week. So there is a lot of pressure to put more interest rates up more in the euro zone, which is just going to make the euro more bullish. So that's the overnight news. And as I say, CPI today is all we've got for news. 2 minutes to the open. The DAX, very weird price action on the DAX this morning. Look, when you get lots of wiki candles like this, it indicates that there's no liquidity in the market. So if you're running the ORB this morning, might want to be a little bit careful, because this is not normal price action. This is very, very wiki, which means they're having to move up and down a lot just to get whatever orders are there filled. So there's not a lot of movement going on at the minute. Not quite sure why. Be a bit careful this morning. We might find you get a bit of a high spread, but we'll see. We got just under a minute until the open. Yeah, it's really ticking around a lot, but it's not going anywhere. It's just wicks. Where are we? So DAX this morning, we've still got... Sorry if I deafened anybody there with my whistle. We've still got the gap fill to do down here on the DAX, bottom of this propulsion gap. We're right up at the highs, so really, really, really looks like a decent short at the moment. We've got these two little gaps, the big gap here and a little gap there. There's the monthly low from 2 months ago. Sorry, from last month. So yeah, downside targets look very tasty at the moment, but we're not going anywhere. No traction, just sideways, just range bound. Yesterday was terrible, just didn't go anywhere. Yesterday was a V-shaped recovery. The day before was sideways. So literally no progress in any direction at all. We're sitting up at the last month's high at the moment. Look at that. So there's your 15-minute pre-market range. So upside, if we go for a break to the upside, which we have on the pre-market, we're looking at previous day's high and last week's high as potential upside targets, which is hardly any distance at all. It's 38. It's less than a quarter of an ADR, so no distance at all. Downside targets, we'll be looking for 175 ADR, which is basically back down at this range low again. So there's your 15-minute pre-market. That's gone very nicely this morning. So we're looking to go long. Morning, Dreska. Morning, Joaquin. Morning, Hari Krishna. The Euro US dollar will test again due to US CPI. Yeah, it could go anywhere. Morning, Brian. Morning, Virginia. Euro US dollar will test 1.10625. Who knows? $1.0625. What's the relevance in that? That propulsion gap, yes. But it's all dependent on what happens with CPI. So if we get a bullish CPI number, this is coming down. If we get a bearish CPI number, that's going up. So there's your 5-minute opening range going in at the moment. Fairly big gap there. Morning, Kenley. How are we doing? Right. Just quick run over while we're waiting for the opening range breakout to go in. Opening range to go in. We've got this hourly propulsion gap as well here that we're going to test. So we're getting, I would say that level's probably on the cards. Just got stuck in that gap there. So what if CPI remains the same? Don't know. You probably will get a whipsaw. So when you get when news comes out as expected, you tend to get a bullish move on the currency because what the market does is it factors in expectation. So wrong week. So it factors in expectation. So when we have a forecast, the market will tend to factor in what that forecast is going to be, and they will move the market either up or down to reposition themselves with the expectation of that is what's going to happen, which is why when you get news which is big or small, big hits above or below, you get big spikes in the market because it's basically the market going, oh, we didn't realize it's going to be that big. We'll put more in, and then you get a rally. Then it tends to pull back and push off from there. So when you get in as expected, you tend to get a continuation in the direction that it's going. So if the market has been dropping the currency towards an expectation and you get that expectation, you tend to get a continuation of that drop. Expect, what we usually sort of say is expected or above expected is bullish, below expected is bearish. So there's more chance of things tending to go bullish on news than there is bearish, but it really depends on the news. And it also depends on other current market conditions. There's this thing in America with the interest rate payments they're going to potentially default on. It doesn't matter how good your inflation figure drop is, you're going to be in trouble. So it's difficult to tell. That propulsion gap's holding up at the moment on the DAX. But if you took the 15-minute pre-market this morning, you've had a lovely little profit of just over 1.5 hour on that one. That's 1.5 hour is there. Nice break to the upside. We are getting stuck in this propulsion gap though on the hourly. So, morning Diamond, morning Brian. 8 ball, yeah. Brian's got the 8 ball out. It's going to go up or it's going to go down. I can guarantee you that today. We've had very little movement on anything really. So we're expecting a big day today. When can you apply a stop loss on MT4 or MT5? How many pips? What? When can you apply a stop loss? How many pips? Whenever you want. Put stop loss on anything. I don't understand the question. I'm just keeping an eye on what's going on with the US dollar this morning. So, quick look at yesterday. Recap. Oh, wow. That was a big rejection. So the DAX has rejected the highs. We're now out the lows. So your 5-minute ORB today is short. There's your 5-minute opening range. It's a breakout to the downside. That's a big rejection. 1.4. Downside initial target on the hourly is a gap fill there. We've just rejected that high. So yesterday's low is your first target really after that propulsion gap. And then, as I say, 175 ADR. So we could get a decent move today. There's some volume coming in now after that really weird pre-market. So we'll see where that goes. So yeah, quick look at yesterday. AGR reversals banked 1.42% yesterday. So got all the losses of the previous day back. made a little bit of progress, sitting in 2.15% of drawdown. Nothing particularly exciting there. Stuck a little bit in the Euro New Zealand and New Zealand dollar Swiss. So the New Zealand dollar is a little bit squeezy at the minute. So that's the ADR reversal strategy. That's 3% banked this month so far. H1M5 sitting in 1.5%, banked 0.35% yesterday, 11.38 for the month. Not a lot of movement on this. So yesterday, basically, and the day before, mean reversion strategies are great when you're in a range, but when the range is so tight that you can't actually move half an ADR, you're never going to bank anything. So basically, we've just been sitting fluttering up and down between 0.5% and 2% of drawdown. So nothing much banked. 1% just about banked on the H4 M5 yesterday. 0.22 done in drawdown control this morning, and 1.78 in DD. Looks like pound CAD will probably bank today. Few other bits getting close there, but there's nothing in drawdown really. Euro pound is the worst thing there, but it's only 0.5%. And the H1 hedge set file, flat day yesterday, didn't manage to bank anything, didn't do any drawdown. So this shows you how bad the market conditions were yesterday. This is a H1 hedging set file. So it's literally just taking reversal alerts in both directions. It couldn't bank anything, and it didn't move far enough to do any drawdown control. So it just shows you the market yesterday was literally sideways. So nothing banked at all yesterday. 0.03 done in drawdown control, sitting in 8.17%. There's nothing, 8.81, sorry. There's no drawdown apart from that New Zealand dollar, US dollar. There's nothing above 1%. So New Zealand dollar, again, squeezy. So we'll have a look at these New Zealands this morning, but everything, nothing much to report from yesterday because we didn't really get a lot of movement. ADR reversals was best banker yesterday, 1.4. So let's have a quick look. So ADRs, obviously there's no ADRs. So this is day 3 now, no ADRs. We didn't have any ADRs on Monday. We haven't had any ADRs yesterday. Nothing's hit its weekly range. We're on Wednesday. Obviously this is the second week of the month. Nothing's hit its monthly ranges. So completely flat on the ADRs. Nothing to look at all. RSIs, hardly anything to look at either. So we'll have a look at these New Zealands and the RSIs, but not a lot going on at the moment. Michael, morning. Henry, what RSI settings have you got on H1M5 and H4M15? So basically H1M5 is the 21 RSI. H4M15 is the 14 RSI. So I use the 14. So basically it's exactly as taught in the bootcamp. Yeah, so 21 on the hourly and 14 on the 4-hour. Right, let's have a quick look at these RSIs. We've got a New Zealand. Let's start back to front today. New Zealand dollar yen. So New Zealand dollar yen is a 4-hour RSI extension. We've just gone back up again. So this one's got a little bit stuck in an M pattern reversal here. We did have a reversal alert on the 4-hour there yesterday, but they've just tapped the high there and put in a new high. So we've got still the same M pattern there. So there's 3 types of M pattern. You've got a double top. You've got a stop hunt, which is what this one is here. And then you've got a lower high on the second leg. So it's that, or that, the reversal patterns. So this is basically a stop run. Yeah, so they've just taken out the highs of yesterday. So that reversal alert obviously will be the one which causes the M pattern. Nicely extended, really nice divergence on this. If you look at the divergence here, this is really strong bearish divergence. The one short on, that's on the H1M5. We're above the monthly high and we're above last week's high. So big, strong push on this New Zealand. Just nice short opportunity really, but would have been in it from yesterday anyway, or the day before, in fact, I think was the entry on this. Yeah, day before. So yeah, just in it, waiting, haven't gone anywhere. So lovely targets to the downside. These 3 targets here are your main ones. That one's done, and that one's pretty much done. So you have got a target there, which is half an ADR. So that is an exit target. But yeah, so New Zealand dollar yen looks good. So if we'll quickly whiz through all these New Zealand dollar pairs and have a look at them. You can see we've had a very good, strong move on the New Zealand dollar. Big move up on the New Zealand dollar, US dollar. So this is like 1, 2, 3, 4, 5, 6, 7 days straight up. And now we are flagging. So potential for a break to the upside. So this is going to move today based on the CPI figures. I've got RSI stuck in my brain now because someone was talking about RSI this morning. So we got too many acronyms. CPI this morning, this afternoon rather, at 1:30. So depending on what happens with the US dollar, we're either going to get that drop back down to target here, or we're going to get a flag break to the upside. It could go either way. Really could go either way with the US dollar today. So big strong move on the New Zealand, as you can see. New Zealand dollar yen we've looked at, that one's been rallying up as well. New Zealand dollar Swiss pushing up. We had a nice profit take move on that one, as you saw. So there was a short entry in there. So that was a nice little trade, but big strong push, all ready to drop. We've had a reversal on the hourly in there, as you can see, M pattern there. So good short targets on that one as well. New Zealand dollar CAD, that one came down a lot faster because of the big move on the Canadian dollar. So that came and tapped straight into that propulsion gap. That was the entry on that one, and the exit. Just about to get reversal on New Zealand dollar CAD. I've got a New Zealand dollar US dollar short on the prop account at the moment. Target is here. What, 200 ADR. In fact, I've got two targets on this because I've got 3 positions on it. So I've got one target here at 150 ADR, and then I've got the main target down there at that propulsion gap. So I'm just targeting that low as well, just in case we get a bounce double bottom off that low. But yeah, so all these have moved very, very nicely, these New Zealand. Some of them are all undone. If you look at the Euro New Zealand as well, which is extended on the 4 hour, that one's had a very, very big, fast, hard drop. We're down below the 20 level. So that's a beautiful long opportunity. Got 2 positions on this one already. Should be taking a third, I think, this morning on this. Didn't get a third on. Why didn't I get a third on? 159. Whoops, wrong one. $159, 5%, 119. $104. Did this to me yesterday. So the reversal is 104 pips. 3/4 of an ADR on this is 119. I've only got 2 positions on. If I had more positions on this, I would take a manual trade there. I like this. This big move here. We've had this big down day, and then a second big down day. There's possibly another leg in it, which is why I'm not going to take one manually. But other than that, all the way back up into that propulsion gap and above for the euro. The euro is going to rally. It's just obviously the euro has been weak against the New Zealand dollar. And New Zealand dollar has been rallying at the same time. So it's just a big, strong, bullish move on the cards for this one. Just trying to time it, really. I don't want to get in too aggressively on it. I'm just going to let the EA trade it. But yeah, it looks good. This is obviously a potential 72 bounce here as well. So continuation in this trend. We could well drop below, as we have done there. But a lot of the recent trend on this has been 24, 72 bounces. And this is a 72 potentially for a continuation to the upside. This is the biggest RSI extension we've had all year. So this is going back to March. If we go back a little bit further. Sorry, that's March last year. What are we talking about? This is the 4-hour chart. Sorry. Usually when I'm looking at the hourly chart, it goes back about a year. So yeah, this is going back a year, basically, back to March 2022. We had an RSI extension there. We looked at this yesterday, didn't we? So there's your RSI extensions to the downside. Had a push there, but a continuation move down. Big move up there. Push, push, push. Yeah, so we're just waiting. This is the biggest extension all year. There's no reason why this is a knee-jerk reaction, as I said, to the euro move. The market was expecting 4. It got 3.75 on the interest rate. Therefore, they tanked because they had too much money in the euro. They've pulled that out now, so it's ready for the next leg up. So just waiting for them to put a bit of money into the euro. We've got no euro news coming up this week. The pound tomorrow will quite possibly rally the euro. We've also got Jordan speaking at 5. Now, Jordan's very hit and miss. The Swiss National Bank are very tight-lipped about what they do with anything. They tend to drop little surprises on us regularly. So we might get something come out of the SNB later. And if it's bullish, obviously, that's going to rally the euro. But there's no euro news expected this week. So we might have to wait until next week to get a decent move on the euro. We've got next week, got no euro news next week either. It's all pound and US based in Canadian. Yeah, no, there's no euro news. So we've got nothing coming up on the euro to rally it from a news perspective. So PMIs towards the end of the month. So just a case of waiting really on the euro. But that's Euro New Zealand. So that's extended on the 4 hour. Big extension there. Morning, Anna. Euro pound. Whoops, one. So DAX ORB, there's your 15-minute range now in. Very whippy this morning. Very whippy. Not really got any idea which way it wants to go. So your 5-minute ORB to the downside made a lovely big move, but it's pulled back a long way. Chances are you might have been stopped out on that, depending on how you got your stops set up, your trailing stops if you got them. But yeah, not very exciting today. It doesn't seem to want to go anywhere. So that's Euro pound. Sorry, flitting around. That's Euro New Zealand. Euro pound is extended on the 4 hour to the downside as well. This looked like it was having a potential start of a move to the upside. So we got another 1.5, 2 hours left on this candle at the moment on the 4 hour chart. So all we got was a little flag break on this, and we've just flagged again. So I suspect what we're going to do here is put in a W-shaped reversal at the lows here. So we could push down again and take that low out and rally back up again, but looks like this is a good spot to start taking along. There's no real obvious support coming up until we get down to this propulsion gap here, which is 125 ADR today. So that's your high. You've got another high down there. You've got another little high there, few there. But this propulsion gap is what started that move to the upside, that news break to the upside. And this is what we're filling at the moment. So coming back down into there is your next level to the downside. So 125 ADR. So got one position on this on the H1 from, I think it was yesterday, yeah. So from yesterday, so we got the H1 extension yesterday, M5 reversal alert was in there. So taking that initial position, hourly reversal. So potentially today is the day we start that move back up to the upside. When we get these CPI figures come out for the US this afternoon, everything is going to start to move because you get lots of movement on all currencies. So if we get a big hit or a big miss on the CPI figure, they will pull money out of all the other currencies to pile it into the US dollar. Or if it's a big miss, they will pull money out of the US dollar and pile it into the other currencies. So you tend to get a lot of movement on all currencies when the CPI figure comes out. And also they know how they want to readjust their portfolios. So we might find this afternoon will be some big moves on this, but I think this morning's session is going to be pretty sideways. Usually is on ahead of big news. So, but in one, so waiting for that to push, and that is extended on the 4 hour still, just starting to tick up now. Again, divergence on here. So we had bullish divergence. That was a really badly drawn line, wasn't it? Bullish divergence there. And we've got kind of flat. It's a little bit downward pointing, but you can see obviously the steepness of the drop and the strength of the currencies are maintaining. So there will be a bullish move off of this. There'll be a profit take move coming off of this soon. This is actually a big move, 164 off of a 50 ADR. So this is a 3 ADR drop without a profit take. So there'll be a big pullback into that area at some point soon. Euro CAD. Again, big extension to the downside. We know the euro's been absolutely trounced since the inflation figures last week and the interest rate figures last week. So we're extended and embedded. Got one position on the hourly RSI extension in there, waiting for another signal to get in on this. 65, 129. So it's not quite 3/4 of an ADR movement yet. We just haven't had any movement this week, so it's very difficult to get into anything with more than one position. But so EuroCAD, very big extension. So this entire move here is 457 pips on a 129 ADR. So that's pretty much 3 ADR plus down. Again, big profit take move on the cards back up into here, that level of support. Look at it on the hourly. Your propulsion gap targets are very, very, very many and very spread out. So that one's probably done. We've got this big one which started the accumulation break up there. And then we've got the break of that low there, which was caused by that propulsion gap. So that 150 ADR is the obvious target to come and fill that one. That's the big one. That's where we're likely to see if there is any continuation strength to the downside. That's where we're likely to see the sellers start to add to their positions. So EuroCAD, nicely extended, and Euro Odd, also very nicely extended on the 4-hour. Again, big drop. No profit take move at all yet on this. We're 485 off of a 155 ADR. So big extension there. So it's 3 and a bit ADR to the downside. Again, looking for a pushback. Got that level there as potential resistance to the upside on the hourly. Looking at the reversal, so the propulsion gap targets to the upside. Got that area there. That's been tested twice. That's untested. That's a lovely accumulation break to the downside. So that's a really nice, easy target. But we've got that potential for a resistance if we are going to do another leg down. But as I say, there's no reason why we should be seeing this much weakness in the euro apart from the fact that market over-egged it. They basically went in too hard on the euro, expecting a bigger interest rate rise. They didn't get it, so they've dumped it. So I don't think it's weakness in the euro. I think we're just waiting for them to just start next leg up. So they're enticing a lot of shorts in, and they'll come up and take them out. We're down at the previous 3 weeks ago support at the moment, which we've basically bounced at, and now we're just sitting and in a nice area of balance down here. We've got propulsion gap targets to the downside. That's your monthly low. So if we get a continuation move down, so if this is Australian dollar, obviously the euro odd, there's no news coming out on the Aussie, there's no news coming out on the euro. So there's nothing really to catapult this at all at the moment. So this could just grind its way down, back down to 125 ADR. So if you're in this one yesterday from there, or sorry, from the previous day from there, then you could take a second one here. We're not quite, how far away are we? Where we are at the moment, we're 116 pips away. 155 is an ADR on this. So 116 pips. Not quite. So the EA is not getting me into a second position here. We've had the reverse alert this morning. Somewhere. Have we not? Oh yeah, sorry, I'm sitting right on top of it. So there's your, it's just a mess. Look, you can see it's drawn the support rectangle on top of the reverse alert because we've literally just been going sideways for pretty much 2 days now. So yeah, you've had your reverse alert and that one's kicked in short. So your reverse alert's going to be there. Sorry, I can't even read the chart. It's just an utter sideways mess at the minute. So yeah, potential second entry there. The third entry will be 125 ADR, which is your monthly low. And that will fill all these propulsion gaps to the downside, apart from that little one down there, and then give you loads of targets to the upside. So looking good, all ready to go. Just not going anywhere at the moment. No movement. Morning, Abraham. Good morning from here. I don't know where here is. You haven't said. That's very cryptic. Good morning from here too. I'm not telling you where I am either. DAX is still coming down. Very tricky this morning. So, yeah, I like it short. I love the DAX short from up here. So, yeah, we've had a reverse alert on M5 this morning. We've had the opening range break to the downside. So, yeah, short. I'm just not convinced by anything any of these indices are doing at the moment because they are literally just either rotation days, which are not good, or V-shaped recovery days, which is fine as long as you can get on that. But yeah, just downside target and upside target. You're bang in the middle. Could go either way. It's very difficult to read anything at the moment with these indices, especially the DAX. As you can see, we're now on, I mean, depending on where you think this range started from, potentially there, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 20 trading days sideways. What can you do with that apart from playing the ranges? So short it at the moment and get out at 175 ADR, assuming we're not going to make any progress. Hussan, good morning. Morning, Henry. Any euro pairs you wouldn't trade today? Wouldn't trade? I don't really look at opportunities I wouldn't take. I look at opportunities I would take. Euro CAD is a nice long. Euro odd is a nice. They're all nice longs. All the euros are nice longs at the moment. Euro Swiss is nice. Not as nice, but Euro Pound is nice. Euro New Zealand. Euro Pound, you've got to be careful with. I've just taken a long on the... I've got Euro Pound on long at the moment, and I've got Euro New Zealand long on at the moment. The Euro Pound trade, obviously we've got the rates tomorrow at 12 o'clock. So I'm expecting a bullish move on the pound tomorrow. So I'm longing this today. So is the EA. The EA is in this on an H1M5, which is basically what I'm trading on the prop account. So I'm looking for some movement to the upside today, but I'm going to get out of it today, regardless of what happens. I don't really want to hold it into tomorrow morning because it is just going to go sideways. So I'm just going to get out of the euro pound with whatever it gives me today, which is probably not going to be a lot because I don't think we're going to get a lot of movement on the pound today because obviously they're going to be waiting for the rates tomorrow. But all the euros are longs. If you look at the buyer scorecard on the euro, yeah, everything is a long, apart from the euro US dollar, which is a short. But I'd be questionable about the US dollar at the moment being strong. So it's either range bound or long for the euro. COP positioning is strong on the euro. Retail positioning at the moment, they are all longing most of the pairs, which is why we've got this big drop. So obviously what the market tends to do as they see a drop is try to catch the falling knife over and over and over and over again. And all they do is they put lots of more liquidity and stops in the market. So we do the opposite to what retail does. So at the moment, until retail basically flip and say, all right, yeah, fine, we're going to go short, the euro is going to struggle to go up because there's too much liquidity and too much money to be made to the downside. So, but they're all longs. So it's just, you know, as position trading, you just got to bide your time. We've gone nowhere for 2 days. As I said, we've got no ADRs for 2 days. We've had no weekly range hits. The RSI dashboard's pretty much flat apart from these euros, which are all starting to flatten out as well. So there's no opportunities at the minute. It's just a sideways market. Yeah, just if you want to get into some euros, Euro New Zealand, Euro Pound, Euro CAD, and Euro Odd, all good long opportunities on the 4 hour. So M5, M15 reversal alerts using the 4 hour RSI for the extension. And there's loads of targets to the upside on all these euros. Look, all blue to the upside. Yeah. We've got, you know, but could do that and then that, could do that and then that, one or the other. But I'd be more inclined to go long after a drop like that because they're more likely to want to take profit on this move ahead of the next batch of news. So longs. Hussein, all the great traders I have read before, they preach not to add into losing positions, while add into winners only. Your strategy seems to be reverse and average down the loser. Correct. All the great traders. Can you show me these great traders' P&Ls, or are they book publishers and course sellers? When you talk about great traders, do you consider people like Paul Tudor Jones and Warren Buffett to be great traders? Because they do not add to winners. They average into positions. Banks average into positions. Investment funds average into positions. Hedge funds average into positions. pension funds average into positions. The banks average into positions. Traders put orders in the market to get stopped out and lose money. I don't do that. But, yeah, you're right. All the books tell you to do that. So why are there 78 people in here at the moment that haven't managed to make that work? I don't know. I just do it different. Call me old-fashioned, but I don't do what everybody else does. Maybe that's why I make money. Think about it that way. That's all I've got for you today. There's nothing else to look at, really. We've got a few extensions, no ADRs. Everything's quiet on the Western Front, and we're just waiting for the news. Smash the like button, as Steve said. But if anybody's got any other pairs you want to look at, let me know. No one's mentioned it yet today. I'm disappointed. No one's... There we go. Steve's mentioned it. No one's mentioned it for 2 days. I just realised. No one's mentioned it yesterday, though. I was like, what? Gold. I haven't covered oil as well yet. Saying, sorry, to stop being pedantic to you, go and watch the bootcamp. And it's all free on the website. Go and watch the bootcamp. There's links going along the bottom. Everything on the website. Go and watch the course and decide whether position trading's for you or not. Not for everybody, but it works. Gold. So at the moment, obviously, we're waiting for the US CPI figures. DAX has broken the 15-minute opening range. We are now down below yesterday's low. Gold obviously flagged back up into that propulsion gap and filled it. We've got the propulsion gap target to the upside and this one to the downside, which they added to. So with gold, we had this massive, nice balance area. Then we had the accumulation break there. That's that propulsion gap. We accumulated again, broke back up to the upside. So they've come back and they've tested this and added to it. So it looks to me like a bit more of a long on gold. However, obviously today we've got the CPI figures. So if the inflation comes out as a negative number, gold is going to rally. If it comes out as a positive number, gold is going to tank. So you've got targets from where you are right now, which is sitting at the previous day's high. You've got targets to the upside and to the downside, and your equidistance between the two. So there's no real advantage in any way, shape or form on gold at the moment. We're extended. We're not extended, we're flat. We were extended, that was your long. We were extended, that was your short. So at the moment, you've just got nowhere to go. So difficult to tell with gold really at the moment. Oil, yesterday we had a little bit more progress on oil. So this was the reversal pattern. That was the previous day's high, and we just about tapped it yesterday and put in a new high with a rally. And it was literally, again, it was a 2-hour move. That was it. So gold just sat there, stagnated, and then 2 hours it popped, and that was it. So we didn't get any real clues. We are finding it hard to get through this propulsion gap by the looks of things. And this is your resistance from last month, or that's last month's low, basically. So it's very tricky to know what to do with this one. I like oil as a long just because that's what the market is predicting. From a fundamental perspective, we don't seem to be buying as much oil as we used to. And stocks don't seem to be dwindling. So I got a feeling it might be that we've kind of got this type of movement ahead of us in oil now. So I'm not trading it at the moment. I've done all right on it and I've got stung by it. So I'm not really interested. I'm much more interested in FX because it's more predictable. But it does seem to be paying attention to the propulsion gaps. As you can see, all the propulsion gaps are filled in the past. We've just filled those and bounced straight out of them. So I would call $80 a barrel at some point. How it's going to get there, though, is totally erratic. So very tricky oil. RSI extensions seem to be working okay on it. However, I don't trust it because of the way it moves. It moves very much like gold. So you get these big rallies, which if you're position trading, you're going to get squeezed a lot. And the movement is fast. So right now where we are, I think you're quite safe if you wanted to long it, or if you longed it out of there. I don't think we're going to get back and invalidate that low. So as a long position now, I think it looks good. However, it might want to pull back into there first. So oil inventories this afternoon at 3:30. So we're going to get movement at 3:30 this afternoon. We always do on a Wednesday because the oil inventories come out. So yeah, potential for it to go either way today, I think. So yeah, it doesn't help you much, does it? Not my friend anymore, oil. Fallen out of love with it. Swiss yen and pound yen. So Swiss yen, I haven't got any yen on at all. It looks like we've got a weak US dollar this morning. Pound US dollar pushing, euro US dollar pushing a little bit. So New Zealand dollar US dollar is pushing up as well. So we've got a little bit of a weak US dollar movement at the moment. So Swiss yen, cover that one first. So Swiss yen, basically, we are in a nice uptrend on this. The Swissie's been doing very, very well. Obviously, the Swissie suffered with the euro when the euro rates changed. It is starting to recover now. This yen, basically, we've had no news on the yen. What's that, Taiwan? So there's more the Taiwan to get 18 HIMARS systems from the US 1 year earlier in 2026. So the way this is so west and east at the moment, isn't it? You got Russia and China getting all narky, and you've got the US and Europe providing weapons to the ones that they think are going to get attacked by them. Doesn't bode well, does it? So yeah, yen at the moment is fairly weak. It has its moments of strength, but obviously at the moment the yen is weak. So I would say longs on all of these, follow the trend on the yen, and just keep buying the dips, basically. If you look at on the buyer scorecard at all the yen pairs, they are all fundamentally longs. Everything is long against the yen. So everything is bullish. COT positioning is more long than short. At the moment, retail is all shorting it, so it's going up. And the fundamentals will always be good against the yen because the interest rates on the yen is negative 0.1, and there's no reason, they've said, for the next year to year and a half why they will increase that. But they are notorious for intervening and making things different very, very quickly. So I would be careful with any yens, always careful with the yen, because it can just move crazy with intervention whenever they fancy it. So at the minute, you're stuck sideways. There's no reason to trade the Swiss yen. There was a short opportunity on there, which I got out of there, and it obviously tanked. Then we had a long opportunity down there, which went higher. So, yeah, longs basically on that one. Hourly RSI extension is flat. Haven't had an extension on that one since back here. That was the short, which I got out of. Nice test on the propulsion gap there. Have got a target to the downside to complete, and obviously got a target to the upside. So again, right now, you're stuck in between a rock and a hard place. Could go up or down, couldn't it, from here? But just manage the position accordingly. There's no real reason to get into it now. Pound yen, again, that was the extension. That was the exit on there. So potential pushback down into that propulsion gap, but we've got that one there. So if we can get a move up on this one today, you've got a potential nice short opportunity there. However, we've got the rates coming out tomorrow on the pound. So the pound is going to fly or dump tomorrow. Which way, don't know. All depends what happens with the rates. We're forecasting a rate increase up to 4.5. I don't think they will do anything different. We should get a 4.5 on it. It depends what Bailey says at 12:30 in the press conference. So if Bailey is talking about freezing interest rates, we're coming down. If he talks about we're going to need more because inflation is higher, which I suspect he will, if he doesn't, there's no reason why he wouldn't. I would expect it to move up. So I think we got a bullish move coming on the pound tomorrow. So no way we are getting down there today to 200 ADR to finish that. So this is going to get left behind for a couple of weeks, I think, as we get a rally on the pound. So, but again, no reason to be getting into this right now. wait for it to rally, and then try and mean revert it from there, or jump in and expect the rally. If it dumps back down into that propulsion gap, you can long it, take a second entry, and get out when it comes back up to here. All sorts of ways to trade that one, but I'll be looking more longs than shorts on the yens at the minute. Brian, Aussie Swiss is making a plank pattern on the 1 hour. That's a good one. Aussie Swiss. Yeah, we haven't had a plank pattern before. It totally is, isn't it? I did a plank this morning. I've booked a holiday for August. So we've decided to get our beach bodies on, and we're doing a workout. The whole family's doing a workout routine every morning. So sit-ups, press-ups, Russian twists, flutter kicks, and planks. Every morning, we're going to have abs. Yeah, totally sideways at the minute. So I'm short on this. There's tons of propulsion gap targets, as you can see, to the downside. So yeah, it looks good for shorts. Also looks good for longs. Yeah. But we're coming up into the weekly support here, which we got the lovely bounce off. So looks like a good short, much more short than long. And there's your M pattern reversal. Divergence. Yeah. Bearish divergence. So it looks good for shorts, but it's planking at the moment. George, is the hedging indicator available? I haven't got a hedging indicator. Not quite sure what you mean by that one. Market reverse. All my indicators are on the website, on the indicators page. Link in there. But yeah, all my indicators are available on the website. Do you mean a hedging set file? There's a set file for hedging on the market reversal alerts. If you want a set file for the market reversal alerts EA for hedging, there is one on the linked from the product page on the website to the blog post, which has got all the strategies in and the set files. But there's also one in the Telegram group, which is the H1 one, which is the one I'm running at the moment on the VPS. That's on there as well. So DAX has just filled the propulsion gap to the downside. Target is yesterday's low. So we're just coming through at the moment, previous day's low. If we get that low taken out today, we're on our way down. But that propulsion gap's holding at the minute. Hussein, good morning. GJ direction 4 hour. Ooh. Good name, ooh. GJ, don't know. I've just covered that one, haven't I? Short at the moment. Look at that, rejection of the highs. So that's last month's high. There. Whoops. That line is last month's high. So, don't know. Nice propulsion gap fill. Complete. Don't know. You can't really. I mean, right now looks like a lovely short intraday, doesn't it? But tomorrow at 12 o'clock, this thing could go absolutely ballistic, 300 ADR in one direction or the other. So, market is driven by news. We've got major news coming tomorrow on the pound. So, nice one with the workouts. Yeah, I do work out a lot, as you know. I go spinning 8 times a week. So, I've got legs like tree trunks and arms like Mr. Bean. So I'm working on the upper bit because my legs are absolutely fine. My cardio is absolutely fine, but my arms, I can't even do 10 press-ups. I'm useless. So I'm working. We're doing more upper body stuff. It really aches. Yes, the H1 hedge file. Yes, so that's in the Telegram group. What I might do, I might add that into the set files on the blog post as well, so that it's in there. Morning, Amar. DAX looks like it's rejecting down here. So there's no propulsion gap targets in this. We've traded this very, very efficiently on the way down. There's no targets to the upside on this. So some kind of pullback potentially for a new leg down, or it might just go sideways for a bit or flag and break. But looks like a good short. Any analysis on the US dollar yen? So US dollar yen is flat at the moment on the 4 hour. As you can see, it's not really going very far. I shorted it there. I longed it there. Not really anything at the minute. It's stuck sideways. So it could go either way. It's more likely, I think, to head up here this afternoon, but I'm not sure. You know, you can see what the market's doing at the moment. Nothing. We're waiting. So we're waiting basically for the CPI figures to come out. Once the CPI figures are out, obviously we will get a knee-jerk reaction to those. But as the Fed is decided, it looks like it's going to freeze its interest rates. It's very hard to know what the US dollar is going to do. And I think, as I said earlier, what we're going to get with the US dollar moving forward now is more of that. I don't think there's any bullish or bearish stance on the US dollar now at the moment. And therefore, it will get pushed around by the other currencies. So if we get a rally in the yen, we'll do that. If we get a dump in the yen, we'll do that. But it won't necessarily because the US dollar is rallying or dumping. It's because the other currency is moving. So that's exactly what we had with the euro. If you look at all the euro pairs going back over the last sort of year and before that, this is where the strength in the euro changed. Back here in sort of August last year, we had them saying, right, we are really going to hike our interest rates and we're going to do it fast. And the market was like, yeah, go on, let's go euro. Before that, it was the whipping boy of the market. And basically the euro was just stagnant sideways. And if the Aussie pumped, we'd dump. If the Aussie dumped, we'd pump. And it is literally the currency does the opposite to what the news impact is on the cross currency. So at the minute, I don't think really the US dollar has got much going for it at all. But because it's not got much going for it, doesn't mean you shouldn't be longing it. As it's extended, it will get profit take moves. The same as anything, you know, there's no real reason to say, I only want to do this with this currency, or I only want to do that. It's going to go up and down. And as you can see, the US dollar CAD, for example, it's been doing nothing but going up and down since September last year. So regardless of whether you shorted it or longed it, you won. And you still will win now. So at the moment, it's probably more likely a good long than a short. As you can see, I've got 2 longs on it. Probably going to come somewhere up into there, unless we get some massive news on the CAD or some massive news on the US, like, whoops, we've defaulted on our interest payments. Bye-bye. Don't know. Until something happens, there's no real reason to say that the US dollar yen should be a massive buy or a massive sell. Historically, when you get up to that level, the Japanese intervene and say, nope, no more. That's where we got the intervention. So the intervention kicked in there. They really said no there, and then they hammered it home there and said, no, we're not having you going higher. And since then, we've started dropping. So at the moment, we've got plenty of room to come up and test last year's high. But we've also got a nice move to the downside down to there. There's no reason to say this should be going up or down at the moment. The Japanese came out and said, yeah, we're looking to increase our interest rates. And then they came out a couple of days later and said, in the next year and a half. And everyone was like, right, fine. So no news there. So everything up and down at the moment. If you look at the bias scorecard, we are still massively range bound on pretty much everything. Yeah, the vast majority of FX pairs at the moment, there is no fundamental bias in either direction. There's no futures bias strong in either direction. fundamentals are all pretty much the same. Everybody's screwed because inflation's going through the roof. Everybody's screwed because interest rates are going up. Nobody's really making any progress on their unemployment, and their GDPs are flat. Everything's the same. So you can trade everything in a range. We are starting to get some indications that we might be wanting to start longing more the yens, but that's been fairly similar for the last 6 months. There's no massive strong sells at the moment. So all you can do really is just trade everything that you see coming up and hope you don't get into squeezes. The squeezes will happen when there's a fundamental shift. You can't forecast a fundamental shift because it's something that's unexpected. So you just have to wait. Yeah. There's a long analysis on the US dollar yen. I have no idea, which is why I trade the way I trade, because it doesn't matter, does it? It doesn't matter. If I get in on this thing now as a short and it goes up, I'll add a position and wait for the profit take to exit. If I get in long now and it comes down and does that and that, I'll get in and get out. Doesn't matter which way it goes. I just get in when I have an expectation of a profit take being imminent. Yeah, so I was expecting it to go up there and I was expecting it to go down there. It did. I don't care which way it goes, which is the beauty of position trading. I don't need to be good. I just need to know how to milk the market. Kevin, thanks a lot. Henry, will you be on stream for the CPI? Don't know, just the usual time. We haven't got any other news, have we? We've got Waller speaking later. No, I'm not gonna bother coming on for it. I don't. My streams. Sorry, it's today, isn't it? There, 1:30. We've got Chairman Jordan this afternoon. So yeah, the people that stream through news events and make sure they're on for news events are usually people that are trying to scout the news, and I don't do that. So whatever happens today will happen today. I've got US dollar exposure long at the moment. Hopefully it goes up. If it doesn't go up, I'll deal with it. There's nothing I can do about the news, so we can look at the news and can watch the news happening, but there's not much point in sitting there going, oh, look, it's gone up. Right, I'll be back at 2:20 for the New York session. You know, there's no point. I'm not a news scalper. I don't mind trading non-farm because non-farm is fun. Non-farm is obviously nuts. And FOMC, but I'm never here for FOMC. So I'm always at a spin class for FOMC. That's how much attention I pay to it. Doesn't matter, does it? People concentrate far too much on the news. It's something that moves the market, and it's very important to understand how and why and what, but you can't forecast what's going to happen. And when it's happened, you can't do anything about it. So I've come to the conclusion over the last decade, be aware of it. It's very important. However, there's nothing you can do about it. If I'm in positions at the moment long on the US dollar and the US dollar tanks today, I've got to deal with the US dollar tanking. I will scale in and out of it. That's all I can do. Watching it happen isn't going to help me. I will have it ping up on my desktop. I will have my monitors open and I'll be watching it. But as you know, I can't change what happens. The outcome is the outcome, which is why I keep saying it's more important how you manage the positions you're in than how you get into the positions, because the market's going to move up and down regardless. It's how you manage that portfolio that's more important than when you enter a trade. Bellino, do you cover the CPI this afternoon? I just can't answer that one, haven't I? Yeah. We'll look at it. We'll look at the CPI result in the live room this afternoon in the New York session. What's the best analogy to understanding a propulsion gap? Based on my minimal recent knowledge, I'm assuming it's a mix of possible ranges, similar to fib projection. No. So the propulsion gap, all a propulsion gap is a big, strong move by the banks and institutions. Yeah. So US dollar is as good an example as any. The best propulsion gap. So literally all this is, you call it what you like. So some people call it an impulse candle. Some people call it a propulsion candle. That's what I call it. Yeah. Some people call it a wide-ranged bar. ICT people call it well, they don't. I don't know what this is because I didn't get far enough. But there's an FVG. I don't know if these are FVGs or what, but they're similar. It's the same sort of concept. Yeah. All it is a fast, hard move in the market on a time frame, and the time frame is important because a fast, hard move on the 5-minute doesn't mean anything. It just means that somebody's placed a load of orders. A fast, hard move on the hourly means there has been a sustained buying rally or selling rally. On the 4-hour, there's been a sustained buying and selling rally. So the lower time frame propulsion gaps, impulse candles, wide range bars, fair value gaps, whatever you want to call them, are less effective on lower time frames than higher time frames. But the best ones are ones like that one there, where you have an accumulation break. So basically, what a propulsion candle is a range breakout. Yeah, so it's just a range breakout. In the same way as we trade the opening range breakout strategy on the DAX this morning. So that was your opening range, 5-minute opening range on the DAX. It broke to the downside. Yeah, that was an accumulation break to the downside. So if you look at the DAX here on the 5-minute chart, there's no propulsion gaps. If we go to the DAX over here and look at the 15-minute chart, we haven't got one either. We haven't got any move enough on the hourly, but let's forecast into the future here. The DAX does this. Yeah, that is your propulsion gap there. So we pushed down, we pushed back up. We didn't go all the way back up to that low wick, and we pushed back down again. We left a space. Now, there's lots of theories as to why the space happens. In the futures market, they're kind of liquidity pools which tend to get retested. So there's two main theories behind them, and who you listen to will depend on which one you believe. Whether they're right or wrong is irrelevant. What we know and the facts that we know is, if you look at this chart, propulsion gaps get filled. Do I care why, how, what? No, I don't care, right? The propulsion gaps appear, and then the market comes back and it fills those gaps. This is why these are grey, because they were put in place. They have been completed, i.e. the market has traded back to them. These ones down here, the market hasn't traded back to them yet. So at some point, very, very high probability, we're going to come back down there. Why? I don't care. Doesn't matter, does it? I'm interested in facts. The fact of the matter is 90% of the time when a propulsion gap is put in place, it is filled. So there's two main theories behind propulsion moves being completed. First one is that right here, there was a massive selling rally and the market decided to push down very, very hard. So what happens is a lot of banks and institutions are caught wrong-sided, and they will do exactly what I do, position trade. So what they do is they scale in to a rally back up into that area. So they drive the market back there because they've got unfinished business. They've got orders that they are one-sided on that they need to complete. So it is a case of basically, we need to get back there to make the market efficient, i.e. we have X amount long and we have less short. Therefore, we need to get more shorts on. The only way we can get more shorts on at that price is to come back here. One theory. Second theory is that when you get a propulsion gap like this, that is where the selling move started, and the market will pull back into there so that the sellers can add to their positions and drive price further. Yeah. So we push up, start the selling move. Let's look at this one down here because this is a really good example. Yeah, we pushed up there. We pulled back. The buyers that started this move added to their position. We pulled back. The sellers tried to beat them. The buyers said, nope, we're long. And they pushed up. Then we sat there for a few days, came back, and the buyers went, no, did you not listen? We're long. Oh, right, okay. We push up, and then we move away. So this propulsion gap is basically buyers adding and adding and adding to the position and defending this price point because they don't want price to trade any lower. That's one theory. Believe it if you want. Whatever you want, it doesn't matter. The fact of the matter is, we know that they act as support and resistance, and we know that they also act as magnets for price. Does it really matter why? No. What you know is that when you're looking at this chart, there's more downside than upside targets. There's more chance of this dropping. There's no time involved either with propulsion gaps. Typically on the hourly chart, you tend to find most of them will get filled within weeks. Sometimes they get filled within days. Sometimes they don't ever get filled. This propulsion gap target here on the CAD Swiss could be an orphan that never ever gets back to that price. It could drop, this CAD Swiss. So let's predict the future. The price of oil is coming down at the moment. Yeah. Canada's main export is oil. So as the price of their main export drops, the value in their currency drops. As their businesses start to make less money, investors start to withdraw their money from those businesses, making the Canadian dollar drop. We have a massive banking crisis and the market pulls all its money out of the stocks and they put it into a safe haven like the Swiss franc. So the Swiss franc powers up, meaning that the CAD Swiss comes down further and further and further. The market's never going to get back there because there's been a fundamental shift. So some of these will never get hit. But if you're using them correctly, you can forecast that, for example, here, we took a long position. It pushed down against us, so we decided to take another long position. We had a propulsion gap there, which was blue, okay, at that point. So I would say, right, I've got a position there, my average is there. When we get back to that propulsion gap, I will exit my position because there's a high probability it will get filled. As the market pushes further against, you can add more positions and say, right, I'm going to target this propulsion gap now because it's closer than that one and it's still above my average. Price pushes up, pushes down, and fills all of those propulsion gaps. Yeah. So the way that I personally use these is as a kind of confirmation that the market has a reason to go in my direction. If I was here right now, let's say, for example, this had traded beautifully. Let's actually try and find one that makes more sense. Kind of trying to find one that is has them all completed in one direction. There you go, pound US dollar. So right now, pound US dollar, I'm looking at this chart. There is absolutely no reason for this to go up. There are no propulsion gap targets to the upside on this at the moment. So there is really only one way the market should go. And that is where I would get out if I was going to go short. If I was feeling super brave and I wanted to hold it for a longer period of time, I would target that. Yeah, but we know they get filled. Look, all these grey ones are old propulsion targets that have all been filled. This one took around about a week. That one there took 2 days. That one there took 3 days. That one there took 1, 2, 3, 4, 5, 6, 7, 8, 9 days to test it, 10, 11 days to fill it. In filling that one, it created a new one, which got filled pretty much the next day. Yeah. So that's basically how I use them. The why, what, where, who cares? Right? If I told you that every time there is a full moon, the wolves howl, do you care why the wolves howl? But if I told you you had to forecast when the wolves are going to howl, what would you pick? Full moon. I can tell you right now the pound US dollar is going to come down. I don't know when. I know it is because it always does. And what I can do as a position trader is say, if I'm feeling aggressive, I can target that. If I don't fancy it quite so much, I can target these two here. If I'm feeling not too sure about it, I'll just target that one. If the price pushes away from me, I know for a fact I've got a reason for the market to drop. I haven't got a reason for the market to go up at the moment. If you look at a higher time frame, there's no reason for this to go up. Yeah, this is the last propulsion gap from 1,500 candles back. We haven't got any more. There is a lot of reasons for this thing to come down though, because this looks like a leg that will continue, and that's literally it. So the mathematics, the theory, the mechanics behind it, believe what you want. There's lots of reasons and they all stand up. All the reasons why these things form and the reasons why the market is attracted back to them, they all stand up. Which one, it's entirely up to you to believe. But that's basically how they work and why they're used. There you go. Another lesson in propulsion gaps. I get asked about that a lot. And obviously confluence as well. So look for confluence. So this propulsion gap here, yeah, has been tested and tested again. It's made a weekly low. So that is the low from last week. Yeah. So that is a lovely target. If that matched up with, let's say, for example, we get down to here, right? And then 100 ADR also appears at that level. There's three confluences there. We've got double bottom, weekly support, and ADR low, all at the same spot. Pretty good target. So, however, I'm much more inclined to use them as targets rather than bounce points. We know the market likes to bounce out of them as well. Yeah, so there, for example, hit it, dropped. Yeah, that one, hit it, dropped. And that's the theory of the market adding into its positions. So the market drove higher, pulled back, they added to their long positions and drove it away again. That's that theory. However, I see these things get run over many times. So this one here, the theory worked and failed. Yeah, so it bounced out of it and it also slammed through it. Do I care? No. The fact of the matter is I know that this is where the target is, where the market is likely to head next. I don't give a monkey's why. Yeah. There you go. DAX is down to next propulsion. Again, look, DAX, talking about it. Show a live example. Yeah. Bang into that one. Market's rejecting. Why? Because there's a target now to the upside. Is it going to do it now? I don't know. If it doesn't, it's going to go down to there and then probably come up to there. So but think about market movement, market structure. If you're stuck in a short position and you've had to scale into it 3 times and you've got 1, 2, 3 propulsion gaps, yeah, you've got to be confident in the fact that this is going to come down, because you can go back to your chart and historically look at it and go, yeah, they always get filled. So if that one doesn't get filled and that one doesn't get filled, that one will. If I can get my average price above that, I can get out of my trade. In exactly the same way as we use ADR to do the same thing. We use ADR to get out of our trades as well, because we know the market spends 58% of its time within its average daily range. Therefore, we know that if our target is within our average daily range, there's a high probability of hitting it. If we stick our target at 3 ADR to the downside and all the propulsion gap targets are upside, you're not going to get that target, are you? Because the market's got no reason to come there. It has got a reason to go there, and it's got 3 ADR. So the worst case scenario is that thing could take months to get back down. Yeah. So it's all to do, all goes together. Somebody asked in the Telegram group yesterday or this morning, which of my indicators is the best? There is no best indicator. They all form a system and a strategy. They all have a reason. So ADR is on there for a reason. Propulsion gaps are on there for a reason. Weekly highs and lows are on there for a reason. Yesterday's highs and lows are there for a reason. The RSI is there for a reason. Market reversal alert is there for a reason. Everything comes together to make an overview of how this thing moves up and down. And all of it is key to trying to figure out how to extract money from it. Not to time an entry, not to get that beautiful sniper entry where I get in there and it goes into 1 pip of drawdown and goes down 25 pips. Not realistic, but I've got a very good understanding of the fact that the market is more likely to go down than up. And I know when it's going to happen. When the CPI figure comes out at 130, that's when it's probably going to happen. So I can time the market based on news, and I can anticipate the direction based on where it has historically always filled in the past, which is propulsion gaps, and where it moves away from and towards, which is support resistance. And I know how far it's going to move intraday, because historically, we know it stays within ADR 58% of the time. So all makes up a big pot of knowledge, basically. There you go. Morning, which pair will you be focusing on today? Can't answer that one, VJ. There isn't a pair to focus on today. Focus on trading and making money, not instruments. GJ breaking down. Yeah. We've got a bounce off of yesterday's low on the DAX. If you're short, that's a beautiful ORB today. Look at that. Absolute collapse. Yeah, pound yen's just starting to break down now. So you've had a reversal at M15 and M5. Nice rejection. So this is the one we looked at, isn't it, for the rejection of previous day's high and monthly high. Good short. US dollar seems at the moment to be strengthening up. Is good. Euro Swiss retest. Yeah, so that's nice weekly. There you go. So again, you know, the reason I've put this indicator out there with the support resistance on, it's key. Support resistance, weekly support resistance zones are used a lot. Yeah, this is a weekly support. Look to the upside. Look at this one on the hourly. Where we are. So we're at a weekly support in a propulsion gap. So if you support the theory of additions to long-term positions, this is where they are going to start to buy up the Euro Swiss. Why? Because that's where they started to buy up the Euro Swiss before. It's simple as that. The market long-term participants, the banks, institutions, pension funds, hedge funds, etc., that are long the Euro Swiss bought it here. Yeah. They are still in these positions. They are not holding for a day or a week. They are holding for a month and a quarter. Yeah, this is why on the daily chart we use the 2472 moving averages. These are the monthly and quarterly moving averages. This is your institutional moving averages, how long the institutions hold positions for. And at the moment, that's where they started their last buy rally. And that's where they added more buys in. And now we're back there again. So it all depends on how many buyers are there, if you support that theory, as to whether or not we're going to rally out of it. If not, we're likely to come back down and trigger the limit orders, which are sitting at ADR at last month's low, previous month's low. So entry there, long. If that fails, entry there, long. Propulsion gap targets are nothing but to the upside. There's no reason for this to go short. All adds up to the same thing. It's just one big view of what we know works in the market. Putting it all together. Is MT5 propulsion indicator done? Yeah, it came out yesterday. So you can go on the website and get that. There is a link now. MT5. Whoops. So that's the indicator, the propulsion. Support resistance is my own version of it, basically, that just cleans it all up and tweaks it. And the support and resistance obviously is the key difference. It's crazy how often wicks are liquidity grabs, stop hunts. Yeah, so the reason behind a wick is, and again, you know, this is one of the reasons I don't like this term smart money concepts, because the people that are trading smart money concepts are trading the wrong thing, in my opinion. They are trading the fact that this is a stop run. Yeah. I would be much more inclined to believe that this level here is where the banks started a rally. Yeah. What the banks will do to defend that position is add limit orders at that level. So what you're seeing here is hundreds and hundreds of limit orders triggering, thousands of limit orders triggering by the banks and institutions. Yeah. So when the sellers sell into it, the banks and institutions trigger limit orders. Yeah. Yes, there is liquidity sitting at that low, which will get taken out. But the liquidity being taken out at that level, right, is not as much as the limit orders which are triggering back the long side. And again, it's all the same stuff. Everything you see on the internet, every course you take is teaching you the same thing. They're just changing the terminology of it. Yeah. as I just said with this indicator, yeah, impulse candles, propulsion candles, wide range bars, fair value gaps. There's so many names. At the end of the day, it is a period of time on a chart where the market moved hard in one direction. Call it what you like. It's the same thing. This here, this wick, is a support and resistance bounce. Smart money concepts call it a stop hunt. Yeah. At the end of the day, this is a support and resistance bounce. The reason support and resistance bounces happen is because this is an area the banks and institutions started a large move with money that you can't even fathom or ever touch. $7 trillion a day goes through this market. The amount of money it takes to move it, one candle like that, is in the millions, many, many, many millions. Yeah. The reason this came down from that level is because the banks decided to go on a selling rally for the Euro Swiss for whatever reason. When it came back to the area here, the banks continued to add to that. Why? Because they did it there and they did it there. But they didn't do it here. Why? We don't know. Do we care? No. Support and resistance works. That's what we know. That's what we need to be aware of. This is a support bounce. All the smart money concept traders are going now, there's been a beautiful stop run at that level. Wait for a break of structure to get in. Market reversal alert. All this is market structure at support and resistance. Some people call it PASR. Price action at support and resistance. Support and resistance is the key thing. That is formed by propulsion moves and turning points in the market. Lines and zones. You don't need to understand necessarily all the mechanics that goes behind it. But, you know, I can guarantee you the reason that is moving now is because the banks and institutions have millions of dollars worth of limit orders sitting at that level because they did there. I know that for a fact because I know people that work in banks and I know how the banks work. They are hunting liquidity because they need to get orders completed. But there's many desks in a bank. You've got your prop desks. You've got your commercial desks, you've got your fund desks, there's all sorts of desks. The market maker desk. The market maker desk is the one that hunts the liquidity. The market maker desk makes up less than 10% of the entire market movement by a bank. So the market maker desk is the one that's doing the stop hunts. If smart money concept traders are focusing on that 10%, they're missing the big picture, in my opinion. And, you know, smart money concepts is all based around bank movement, except they, oh no, I've done that button again. I forgot to get rid of that button. Just get rid of that button. So yeah, I mean, the bank side of things is just not what you should be focusing on. You should be focusing on what you can see on your chart, which is basically movement. And at the end of the day, it doesn't matter why it moves. What your job as a trader is to do is to develop an edge. And your edge has to be based on what you can see happening in the past because you can't predict the future. If you can't predict the future, how can you possibly imagine that you can time the market and when the market is going to move? You can't do that. No one in the universe can do that. But what we can see is how the institutions and the banks move the instruments that they trade and what happens when they move them. So when they move them, they leave gaps. When they get those gaps, they tend to fill those gaps. Why? Don't care. When the market gets back to previous levels of supports and resistance, it tends to bounce at them. Why? Don't care. I know why, because they got a lot of orders sitting at those levels because they are historical levels that all market participants are watching. When I was talking about the different desks in the banks, you've got the speculative desk, the prop desks in banks. Their job is to make money out of the Forex market, not to execute commercial orders in the Forex market or to make markets themselves. Their order is to have, their job is to have a portfolio of money and come back to their managers with a bigger portfolio of money every month, quarter, and year. Yeah. They are watching these levels. Why? Because they know that the last time the guys in the bank that they're working in moved the market from that level. When it gets back to that level, there's a high probability that will happen again. So they place limit orders at those levels to trigger and get ahead of the game and get out very, very quick. If you get a support bounce like this one that we're seeing on the Euro Swiss at the moment, yeah, and you've got a $25 million portfolio and you stick a 500 grand long on that, which is a tiny proportion of your portfolio, 0.25%, which is funnily enough what we trade as a risk, it moves away from it. Why? Because you've just dumped 500,000 in the market. Everybody that's been selling into that has just found what's called an iceberg order, a 500,000 order, and you enter it in multiple bits and pieces, which is why you see on lower time frames things bouncing here. Not because they've just taken the liquidity of that little piece of market there, because there's millions of pounds worth of orders triggering at that level. Support, resistance. You know, and people identify support and resistance and they go, right, let's come up with another reason why it moves. Stop runs. Less than 5% of the money in the market is retail. Do you really think the market is going to run and try and find that little 5%? No. What they're finding is the big institutional money that is sitting there. Yeah, and this happens a lot more in futures than it does in CFDs. What you're seeing here is your broker's interpretation of price. The market is moving from that level because orders are triggering there. If you look at a different broker, I'm just going to see if I've got the same price action on Euro Swiss on Fido. So Fido Crest swept it by 15. Same price action. So you will find on some brokers, yeah, that will be an exact double bottom. Other brokers will spread it to take out the liquidity down there, and that is basically taking retail money. They will spread the market to take retail traders out. The banks and institutions are hunting liquidity. They know liquidity is sitting at those levels, but they're not hunting liquidity to stop people out and kill them. They're hunting liquidity because they've got to execute orders on behalf of commercial clients, and they need to find out where they can get those orders executed. If the liquidity is all sitting up there in the form of limit orders from other institutions and banks, that's where they'll move the market to, because they can. And when they've finished, they will stop, and there will be a profit take move on that move that they've made, because the speculative traders in the bank will be with them on that move, and they get out of those positions, which is why you find market structure, because this is the commercial desks and the speculative desks moving the market. This is the speculative desks exiting their positions. The commercial desks don't exit their positions because they're taking long-term positions. They add to their positions. Therefore, we get market structure. That's how it all works under the hood. But we don't need to know all of that. It's irrelevant. In the same way that you don't need to know what impact CPI has on everything. Yeah, we know that this is all interlinked and this all goes together to make a overall bias on an instrument. Yeah, but if you look at the COT report, the commitment of traders in the futures market, that tells you really what they're doing. Yeah, but we don't know, and this is again the whole premise of the bootcamp, we don't know when. You cannot time an entry in the market. You know you will get a reaction because there will be limit orders there. This thing doesn't mean because we're at support, it's going to do that. This thing could fly through the bottom there. It's bounced there. That doesn't mean it's definitely going up. It means it's bounced there because a load of limit orders are triggered. If there's more sellers on board from banks today than there is buyers, this thing's going to come down through that line. It's not going to get respected, which is why we use support resistance areas and not lines. The line is basically where it is, but if you draw quarter to a half an ADR around that, you will find that that will bounce somewhere there sometimes and somewhere there sometimes, which is why we get double tops, stop runs, and uneven highs. Because this area here is where there is selling pressure. Dependent on how many buyers are in the market when we come back to that level the second time and how many sellers are in the market, we will either hit it to the pip and drop, or we will shoot over it and then drop, or we won't quite get to it and we'll drop. No one on the planet can forecast which of those is going to happen here, but we know that there's a high probability it will at some point from some level around here. Couple that with relative strength being extended and the market needing to breathe, i.e. take profit on previous moves, and you've got a system and an edge. There you go. That was pretty much the boot camp, wasn't it? Covered in 20 minutes. Anyway, that was quite well timed, actually, because someone was talking about SMC stuff to me in Telegram. yesterday, and I was trying to explain the difference between, and it's very difficult when mainly it's ICT stuff, isn't it? That's what people class as the smart money, the original smart money concept, if you like. But people always ask, is this based on that strategy? And it's just market structure. And market structure's been around forever. Look at that. Support, resistance, that level. It bounced there because it's a support and resistance level. So you couple that with market structure. But this is just a break in structure. I find it very difficult to answer the questions about ICT stuff because I haven't done the full thing. It got too complicated, overcomplicating something which is really, really simple. But I don't know if this is exactly how a breaker is represented or a fair value gap is represented, but it's the same stuff. It's just footprints in the market left by the banks. So if you class that as smart money, I am a smart money trader, I guess. But I've been using support and resistance for 15 years. Smart money concepts weren't around when I started trading support and resistance. It's been there forever. So all the same stuff, isn't it? Repackage. It'll be called something else in 2 years' time. There'll be something else around it. They'll call it something else, and people will start trading super bank systems. Beat the market maker. Steve Malrow, he was the first one out with the beat the market maker. And that is exactly right. Steve Malrow is actually more accurate because his strategy was around the market maker. And the market maker, as I say, is around about 10% of the bank's desk activity. Their job is to hunt liquidity, is to make a market. And the way they do that is by driving the price beyond levels to take out liquidity that is sitting there in the form of orders. Now, those orders aren't necessarily stops. They're just orders in the market from banks to go long or short. But as retail traders, it's all become accustomed to this is retail money. No, the banks have also got money there to go short on a breakout. If they go short on a breakout there and the breakout fails, they'll scale in an average into the position to exit it in the same way as we do as position traders. But Steve Malrow's terminology was actually correct in the fact that the market makers are the ones that produce those liquidity runs, which is why they tend to work, because it takes a lot of money moved into one direction to put the banks into negative equity to get above that level. So they have to stop, because if they carry on going, they'll lose money. That's when the market pulls back. That's why the liquidity run, if you like, is there. It's because the banks have got to move to places where there is money. But there's no way of timing whether or not this is going to be a liquidity run or a breakout. You have no way of knowing because you can't predict the future, and you're not the bank. You don't have the power to move the money, the market like the bank does. So all we're doing as retail traders, if you think about it, is trying to predict something that we have no power over predicting, which is pointless. So if you take out the timing element of your trading and just start getting into the market when you think it might turn around, and then if you're wrong, get in again, you'll start making money. Thanks for the follow, Real Talk Mafia. Ooh, good name. Right, there you go. I wonder if you could create a strategy just around that. Oh, I didn't read the second part. You're the reason I started talking about smart money concepts, I wonder if you could create a strategy around it. I think I just did. I've been trading it for years. Soccer punter. So true. A trader can only react to predict is already a loss. Yeah, only if you use a stop loss, though. The only reason you lose money in the market is because you enter a position in the market to lose you money. Yeah. If you were to get into the market, all right, on the US dollar CAD, let's look at the US dollar CAD. This is a good example. So I entered the market there. Yeah. Because RSI was extended. We had a little bit of a reversal in there on the 5-minute chart. So I got in there. The only reason that will ever make me a loss is if I put an order in the market in the form of a stop loss to exit the position with a negative return. Yeah. If you don't put the stop loss order in the market to exit with a negative return, you won't get a negative return. It sounds really simple, and that's what the entire bootcamp is based around. But that is what everybody is taught to do. They are told to enter the market and then place a position that is guaranteed to lose the money. Think about it for a minute. Why would you, if you walked into a casino, right, and said, can I have £1,000 worth of chips, please? And then you say, here you go, here's 800 of them back. I only want this 200 because I know I'm going to lose the 800 and walk away. And then go out and have a pint somewhere. What's the point in going to the casino? If you place an order in the market and go long, and then place another order in the market there to guarantee a loss, what do you think is going to happen? The vast majority of the time, you're guaranteed to lose. Remove that, you're not going to lose. So what you now have is a position in the market and an opportunity to exit that position by averaging into the price movements that we know happen over and over again. Look at these grey things here. Yeah, we know it's going to come up here, 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 and here. We know it's going to go there or there. So why put an order in the market to go, I think it's going to go there, but if it goes there, I'll lose 1% of my account. Why not just wait for it to go down to there and then get in again? Because you know it's going up there. Yeah. You can't predict the future. You have no idea if this is going long or short. Neither do I, neither do the banks. If you go and ask somebody sitting on Barclays right now on the commercial desk and ask them if this is going up or down today, they'll look at you blankly and go, I don't know. I got 25 million. I'm going long on the US today. I've no idea if HSBC have got more than me or not. Because if HSBC have got more than me, it's coming down. If HSBC have got 15 million today and I've got 25, it's going up. He doesn't give a monkeys. He's got an order book he's got to execute. That's his job. So you're trying to predict whether or not the bloke in Barclays has got more money than the bloke in HSBC. How the hell are you going to do that? Not possible. So stop trying to predict the future. Just concentrate on where market moves, how it moves. If you concentrate on how it moves, you know where it's going. Or you've got a good idea where it's going, yeah? I know that there's a 58% chance it's going to stay underneath that line today. However, it's got a 42% chance it's going to go above it. If it's going to go above it, I would say it's not going to get above 125 today because it's probably going to find by the time it gets there, it's exhausted and it's going to want to pull back because the speculative traders will want to take profit on their moves. I have no idea if it's going to do that or it's going to do that. But those are the things that can happen. So all you do as a trader is you position yourself ready for one of those outcomes. If you get the outcome right, brilliant. If you get the outcome wrong, wait until you get it right. I'm wrong temporarily. I'm right 90% of the time. When I'm wrong, I can do something about it. So I've gone long. I was wrong. So I decided to go long again. And as it pushed down, I scaled out of a third of that position there because I was wrong. And now it's back here in the green and I'm sitting in $189 of profit. I took $180 of loss on that move to the downside. So right now I'm sitting at break even. I didn't lose that. I didn't lose that. Whereas if you'd used a stop loss, you'd have lost. If you'd have stop loss, you'd have lost. What have I done? Nothing. I'm break even. Because I'm not stupid. I don't put my orders in the market to tell the market to take my money away from my bank account. I like it in my bank account. I like it green, making me money, not losing me money. But that's not what you're taught to do as a retail trader. You're taught to put orders in the market that are guaranteed to lose you money. You're also taught to make sure that when you place an order in the market, yeah, so let's say, for example, we go long right now. We place our stop loss down there somewhere. We are told that we need to target something like a 3-to-1 risk-reward ratio. Yeah, so if you're going to get in, make sure you have at least a 2R, which is going to be there. I haven't got my 2R on there, have I? Let's put the 2R on there while I'm explaining it. Okay, so there's your 2R. Yeah, in that propulsion gap. Yeah, so if you go long now, right, intraday, you put your stop down there, the market has to get there for you to get a 2-to-1 risk-reward ratio on this trade. That's beyond its average daily range. So there's a 58% chance it's not going to get there. Yeah, because it's beyond what it normally does every day. There's a high probability it will get there because there's a propulsion gap target, and we know that propulsion gaps get filled. We've got a previous support area here, which when we get to it is likely to act as resistance and drive the price back down again, because we didn't want to trade back down below this level. And then one of the banks went, no, we are definitely doing that. Yeah. So the banks are short. When we get back up to there, they're going to want to defend that position and drive it back down again. So when we get to that propulsion gap, they'll probably sell it again. Possibly. Don't know. I haven't got a clue. But what I do know is that there's less than a 60% chance of you getting there today. And there's a very high probability on the news the market's going to do that and stop you out and then go there, which is going to make you annoyed, cross, lose money, and be right on the trade all at the same time. How frustrating is that? No wonder we're crap at trading. But that's what happens to 99% of traders. And that's why 99% of traders lose, is because they put an order in the market to take them out of the market with a guaranteed loss. Stop it, and you will suddenly stop losing money. Very simple. But it then opens up a whole plethora of other problems which you've got to deal with, but they're less impactful than psychological problems which are caused by losing money all the time. Remove that bit, and all of a sudden it becomes very, very simple. Brian, currency conversion is something not talked about much in the FX arena, something that happens every day that you can predict. Currency conversion, yeah, you can predict currency conversion, but you don't know what is going to happen with currency conversion. Currency conversion is always going to happen. And this is what we're looking at. When we're trading Forex, we are trading currency conversion. We are trading the price differential between the US dollar and the Canadian dollar. And that is going to be driven by institutions and banks and commercial activity. But the vast majority of this movement is commercial activity rather than speculative. The speculative movement is hopping on board the commercial activity, and the commercial activity is happening as a direct impact on fundamentals, and the fundamentals are what drives the market. This is why the fundamentals drive the market. Yeah, the banks and institutions. So if you're a big investor at the moment with a load of money, you want to be putting it in the New Zealand dollar or the US dollar because you're going to get the highest interest rate overnight on it. So it makes those currencies attractive. It doesn't make the Swiss franc very attractive at the moment. But that isn't the be all and end all of it. There's so much that goes into it. But again, we don't need to know everything to predict price movement. We can see on the chart what it does. It moves up and it moves down from support and resistance to support and resistance. These peaks here and these bounces here are not coincidental. That happens all the time. It's just what the market does. It moves from support to resistance zones, and it moves up and down in waves, market structure. So as long as we know market structure exists, as long as we know support and resistance exists, and we know areas where the market tends to come back to over and over again, that's a basis for a strategy. But you cannot time your entries. Impossible, because if you could, you would have a 100% strike rate or a 70% strike rate. Everyone's going, oh, I'm looking for a system or strategy with a 70% strike rate. Good luck. I've been looking for 15 years, haven't found one. Well, this one, this is the only one I know of. This is why I do it. But yeah, currency conversion obviously is what moves the market, is banks and institutions converting currency on behalf of commercial clients. That's the whole thing about it. That's why it works and why it moves. Can you recommend any good books? Yeah, loads. There's loads. What do you want to know about, Henry? If you're going to read any books, there's 3 books I would read. Trading in the Zone by Mark Douglas. Larry Williams, all Larry Williams books, actually. Larry Williams has got 3 books out. Short-Term Secrets to Long-Term Trading. Long-Term Secrets to Short-Term Trading, rather, by Larry Williams. I would also read Tom Hugard's book as well. Best Loser Wins. He's only just released that, but Tom is a really good scalp trader. I wouldn't necessarily read it. There's no strategy in there, but Tom explains what it's like to be a trader, which is kind of what I do in here every day. It's not easy, it's horrible, and it's hard work. And he is a high risk trader. He's a high volume scalper, which is kind of what they do in the banks. But there's 1 in 1,000 people who can actually pull that off. But his book is all about the psychology and understanding that you have no control over this market. And that's the same as Mark Douglas's books, Trading in the Zone. You have no control. You can't control this thing. This is a steam train, yeah? If you got in long here, there's nothing you can do about that. So stop trying to control it. What you can do, though, is make sure that you can give yourself an exit without losing too much money. Yeah. As soon as you accept the fact that you can't control the market, where the market goes, and there is always a way out. Larry Williams was a position trader. He is a position. Well, Larry, is he around still? I'm not sure. Yeah, Larry Williams is still around, isn't he? I think. I have to look him up now. I get lost. Not that Larry Williams. Yeah, he's still around. Of course he is. I get lost with who's around and who's not anymore with traders. Some of them are, some of them aren't. Some of them are getting really old. That's why. But yeah, there's loads of books out there. But all I would say is, and I've got a library of trading books, and I've read a lot of books. Reading books makes you incredibly knowledgeable, but it will never, ever make you a good trader. You can have the best theory and understand everything, but trading is all about psychology and understanding how to extract money using an edge. Books teach you theory. Theory doesn't make you money. I know everything about, I pretty much say hand on heart, I've been trading for 15 years. There's nothing I don't know about this market. And I've got colleagues and friends in groups that I've been in for years that are still unprofitable. They are incredibly intelligent, highly motivated people, are just not very good at it. They've read every book under the sun as well. But at the end of the day, the thing you've got to do is release everything that you know and just press the button and deal with what happens after you've pressed the button. And you will either make money or you won't make money. What makes you profitable is when you hit the buy button and you have a position on, yeah, when the market has moved, you exit the position. That's what makes you the money. What everybody tries to do is hold for a reason or a distance that will very likely not happen. And they let those losers turn into winners turn into losers before they take it off, which is why I'm always in and out with 0.25% to 0.5% of market movement of its average daily range, because I know the market has the ability to give me money in that respect. I don't know if the market has got the ability to get back up to that level at 175 ADR in the next few weeks. I do know that I've got a mortgage to pay and I need money in my account. So I take the money when it's there. And that's the psychology bit. There is no book that will teach you when to press the exit button, because you've got emotions of greed and you've got emotions of fear fighting you all the time. You've got to overcome those. That's the only way you will make it as a trader. Eliminating those. The best way I've found to eliminate them is to automate as much as you possibly can. I did all this manually for years. Since I've automated it, it's become so much easier because I don't think about it. Yeah, none of this is me. This is all me. This is my strategy. But this is not me pressing buttons. This is the EA doing this for me. So I could look at this now and I can say, hand on heart, there's a very high probability of hitting that level. I'm getting out here because I know for a fact there's a 99% chance of that happening. If there's an 80% chance of that happening, that's less than that. I take that every day of the week, because half an ADR on this is 43 pips. So when this price movement gets to there, yeah, it's moved half an ADR. above my average price. Yeah, good high probability of that happening. If I squeeze and try and go for twice as much and this thing doesn't get there and it gets to there and it pushes up into there and then it pushes down and does this for 4 days, and then we get some news on the US dollar that they are defaulting on their interest payments and this thing flies down there, that is going to put me in a world of pain. That's really easy to make $500. That is hard to withstand. That would be lovely to make $1,000, but I'd much rather make $500 virtually all the time than make $1,000 and have to wait for it and possibly never even get it. In, out. I'm kind of a scalper in that respect, that I'm in and out the market super fast, except I'm in the market for a long time because I've got to wait for the market to get me out. But don't go for big wins, ever. You look at my P&Ls, they're all the same. Yeah. $480, $200, 400, 600 losses, $200, $800, $800, 400, the occasional 1,000. There's a 2,000 in there. That was an aggressive drawdown control position. So occasionally I have to intervene and do aggressive moves. That was one of them. But the vast majority of these trades you're seeing here, they're all $500, $600, 300, 500, 300, 300, 300. Yeah. I'm not going for fortunes. I'm going for constant, consistent money, not huge wins. Big difference. But all the books will teach you to, and this is the problem with retail education, all the books, most of the books and the strategies and theorems out there are from before the times when we could automate and backtest with infinite precision. Larry Williams, all the old guys that have got these amazing strategies and theorems, and they understand how the market works, they understand how the market moves. They all tell you to cut your losers and let your winners run. That's a different market. That was 20 years ago. Yes, it was important to do that because you didn't have any other way of measuring movement and doing all sort of other things that we have these days. So if you cut your losers and let your winners run, you will win 20 to 30% of your trades. That does work. Yeah. So opening range breakout strategy is a breakout strategy. You need to let the winners run. However, can your psychology stand losing 7 trades in a row as losers twice a week? If the answer is no, you're never going to make it by cutting your losers and letting your winners run. And it's nothing to do with the strategy of the system. It's to do with your brain. And it's your brain that stops you making the money, isn't it? So I decided to eliminate that by eliminating the cut. And if I eliminate the cut and I understand that the market has a profit take move on the cards here, then all I can do is scale into that position and hope that it happens within 1 or 2% of drawdown on my account. And if it can achieve that within 1 or 2% of my drawdown on my account, I'm comfortable. Otherwise, I need to do something about it. And that's the whole purpose of this is I look at this and go, right, Euro New Zealand, 1% of drawdown. I might have to keep an eye on this over the next couple of days. Other than that, just let the rest of this just move over here when it's ready. Don't need to worry about it. So there's no psychology involved. I'm not greedy about anything. I'm not fearful of anything. I'm just dealing with the situation that the market puts me in with each instrument that I get into a trade on. There's no psychology involved. It's either going to be a green bank of $300 or it's going to be $180 worth of loss in a drawdown control position, or it's going to be an aggressive drawdown control, which I'm going to have to deal with at some point once, maybe twice a quarter. That's it. Simple. No, it doesn't matter what books I read, does it? There you go. What are your thoughts on hedging instead of averaging? I don't do hedging at all. Do you only trade on closed candles or live? Closed. Always closed candles. Not really any specific reason. If you look at the US dollar, what was it? The US dollar. What were we looking at that had that double bottom? Can't remember. But always a closed candle, unless it's a breakout strategy. Just that's the way I've always been taught. Wait for the candle to close. If you look at an hourly candle, and you'll find this a lot, 5 minutes before the close of that candle, it will look like that. Yeah. When the candle closes, it looks like it does now. Yeah. So 5 minutes before, it looked like a beautiful bullish move. Yeah. Just as the candle closes, within that last 5 minutes, they retrace that entire movement. Because there are speculative traders and algorithms out there that are enticing trades in from retail in directions, and that candle will close in a different shape or form, which is why, look at this one here, prime example on the screen, right? This reversal alert here, look at that candle and how bearish it is. Yeah. If you'd have looked at this 30 minutes into that candle, it would have looked something like that. And you'd be like, yes, this is a long. Brilliant. I'm just about to get a reversal alert. I'm going long. And then as the candle closed, you were down there. There was no signal to go long. The signal was on the next candle, which was right at the end of the day before the Asian session. So all you do when you get into candles before they close is you're seeing part of the picture, not the full picture. But all you are doing, again, with candles is you are seeing price representation over a period of time. So you're seeing price representation over a period of time on the hourly chart there. If you drop down to the 30-minute chart, you will get a totally different view of the market because you've got two candles in that one candle. So one of those candles probably would have broken structure. The second one reversed it with a bearish engulfing. All relative. And again, you know, what's the best time frame to trade? Market doesn't pay any attention to time. The market moves up and it moves down through time. Yeah. It doesn't draw candlesticks. This is a human invention that is a representation of price over time. So which candlesticks you look at, which time frame you look at, that gives you a completely different overview of what's going on with the price. Yeah. US dollar CAD is sideways at the moment. Yeah. Sideways on the daily, but that period of time we just looked at was that. It's sideways on the daily. It's sideways on the hourly. On the 5-minute chart, it's also sideways. This is a bad example, isn't it? There you go. Euro odd is coming down there. On the hourly, it's coming down. On the daily, it's bullish. So which candlesticks are you looking at? You're going to have a completely different view. People come into the Telegram group and well, they don't anymore because I've banned them all. But all the signal providers, long, gold. Why? No answer. Well, why should I long it? What time frame are you looking at? Are you going to hold it for 6 weeks, 6 months, or 6 minutes? What you're going to do is get a completely different overview of which chart you're looking at. Right now, this is massively bearish. It's not, it's bullish. It's sideways, actually. Yeah. You've got no idea where that's going next, so stop trying to predict it. Anyway, so yeah, hedging instead of averaging, I don't do, by the way. But closed candles, I just got taught on closed candles to use closed candles, purely because if you're trading price action at support or resistance, if you've got a line like that and the price action goes like that and like that, the price action at support and resistance is that. If you're trading the hourly time frame or whatever time frame you're trading. So wait for the candle to close. Wait for the big picture for that hour if you're trading the hourly. On M15, it's going to look totally different. On H4, it's going to look totally different. But if you always wait for the candle to close, that's fine. But if you're waiting for the candle to close, it means that you're concentrating on candlestick patterns. Candlestick patterns have nothing to do with where price is going to be moving next. Yeah, I can find you a million hammers. Yeah, where price shot that way after the hammer. Shooting star. And I can find you a million hammers where price went like that after the hammer. I can also find you a load where it went the other way. Probably fit about 50% of them. Does that give you an edge? No. Nothing gives you an edge in the market. What gives you an edge is the fact that you have no edge and you know roughly where price is likely to go based on historical movement, but you can't predict when it's going to go there, can you? So again, hedging is a reason I don't do hedging is because 90% of the time when I get into a hedge, it goes the way I thought it was going to go. So there's nothing on. I haven't got anything in drawdown that I can show you at the minute, but US dollar CAD is probably the only thing I can show you. Yeah. So this thing got to here, and I longed it. It got down to here. I took another long position there. It then pushed down there. If I'd have taken a hedge short there because I was wrong, look what happened. So all I'm doing is now I'm back into profit on these two, and I can get out of these, but now I'm stuck in a bloody short. So now I've got to scale into my short. And if the thing flies up there now, I'll be looking at it going, well, I was right in the first place. I knew I was right because this thing's extended on the RSI and it's got upside propulsion targets. That's what normally plays out. If I press the hedge button, all I'm doing is I'm slowing down my rate of drawdown, but causing myself a future problem. Doesn't work. There's a guy, I keep forgetting his name. Mission FX guy. What's his name? Sean. What's his name? Sean something, isn't it? I follow his channel. I follow a few channels, and he does well. He doesn't use a stop loss, like it, great, and he scales in and out at support and resistance, good. But he hedges, and he's lost a huge amount of money last month because all of his hedges went wrong, or last week I think it was. All of his hedges went wrong. Yeah, if he hadn't have done those hedges, he wouldn't have lost all that money. He would be able to scale now back into the moves as they come back down, but the hedges lose the money. So it's an incredibly difficult thing to do and very highly skilled. And even the people that try to do it tend to fail. Too difficult, too complex. Hedge funds, and the reason people try to hedge is because they think that's what hedge funds do. Hedge funds don't hedge. Hedge funds are taking a position in the market based on the opposite thing happening in another industry. So if you're hedging gold, for example, long for a client, you're going long in gold because that client holds gold because they are a jewelry manufacturer and they're hedging against the possibility of the price of gold dropping. That's what hedge funds do. They don't take directions in both, a position in both directions in the market. They go one way in the market based on what's going to happen. Corn futures, for example. So you'll have farmers that will hedge the price of corn into the future because they're worried about their crop spoiling. Yeah. So if their crop spoils, they can't make money. The price of corn will go up because there'll be a supply-demand issue. They'll make money on their hedge. Not just trading both directions. That's what we see as retail traders as hedging. Totally different thing. That's why it doesn't work, because everyone's trying to make up a strategy on something that just really has little chance of working. You can test all of this with EAs as well. Go and buy a hedging EA and backtest it. Doesn't work. Evening, might be a little late, Tom. It's morning. Do you trade stocks? No. Options? No. Getting caught up in the what ifs is debilitating, yeah. You mentioned Tom Hugard's book. He always advised in his book that you would never add to a loser. Yeah, that's fine. There's 1,000 ways to crack a nut. Yeah, he cracks his nut in a different way to me. He's a scalper. He's a high risk scalper, yeah. I enter the market with 0.25% risk on 1/2 of an average daily movement. Yeah. So if that price drops by 1 ADR, I'm in 0.5% of drawdown on my account. Tom enters the market with $200 per tick of movement. Yeah. That's why he uses a stop loss, because if he does what I do with his position sizing, he would be bankrupt within 10 minutes. There is no comparison between what Tom Hugard does and what I do. I trade the way the banks do, which is in the position trade. Tom scalps the market. He does what the futures prop desks in the banks do. Yeah, the banks do a lot of stuff. I do one way, he does the other. All the banks do both of those. But most of what the banks do that Tom does is done by algorithms because it's too hard to do as a human being. Tom's bloody good at it. I'm not. But yeah. But you think about it, Hussein, what I'm doing, yeah, is I'm entering a position long on the US dollar CAD. Do I know when it's going to go up? No. So why would I risk 1% of my account on the fact that I might be right or wrong? What I'll risk is 0.25% on it 3 or 4 times. And if it gets to a point where I get, oh my God, this is going to hurt, I will start to get out of the position. I will take my loss. I take losses regularly. Yeah, look at my P&L. loss, 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 lots of losses. I'm not holding things forever, hoping please come back. Otherwise, I'm going to lose my account. I'm taking losses all the time. But what I'm not doing is taking losses on the full position. That position there at 0.76 was a 1-ish, something like that. So I took a third of it off as we pushed down because I was wrong. And I took another position. So I'm splitting my risk into multiple positions in case I'm wrong. If I'm right, I just get out. If I'm wrong, I will put the rest of my position on because I'm getting in at a point of exhaustion. I know that historically, and again, you know, this is what we keep talking about. It's not, you can't predict where the market's going to go when the market's going to go there. But what you can see historically is what happens when certain market conditions are met. So this one on the hourly RSI, when that condition was met, the price dropped. When that condition was met, the price dropped. When that condition was met, the price rose. When that condition was met, it didn't work that time, but the second time it did. Position 1, position 2, exit. I don't put all my eggs in one basket on that thing there and go, right, I'm going in 1% short. If I'm wrong, I'm going to be in 4% drawdown there. If I'm wrong, I'm going to be in 10% drawdown there. If I'm trading 28 FX pairs, I'm dead. That's not what I do. That's what Tom does. And that's why Tom puts a stop in the market. Totally different strategies. But Tom's book, Every Loser Wins, the clue's in the title. He doesn't teach you a strategy. He teaches you how to not lose money. Yeah, if you want to be a high risk, high stakes scalper. I'm not teaching anybody to do that. I'm teaching people to slowly enter and exit the market with the waves that the market makes as a position trader. Yeah, so you can't compare them. One's chalk, one's cheese. You could always trail stops for letting winners run. You could, but you'll get stopped out on every single one of them. Think about market structure. Yeah. Enter. Stopped out on a trailer. Oh, it went further. Enter. Stopped out on a trailer. Oh, it went further. Enter. Stopped out on a trailer. Oh, it went further. What have you done? 3 break-even stop-outs. Well done. If you'd have just got in and let it go, you'd have made a fortune. Trailing stops are the worst invention in the world. Prove me wrong. I've back-tested it 150,000 times on multiple strategies. Every trailing stop loses money. A stop loss should be renamed to a stop profit. Because if you enter the market there, right, and you go short and you put a trailing stop on, your trailing stop moves down, yeah, as price moves down. So let's say your stop was there, your entry was there on that breakout. Yeah. When the market moves down to there, to a 1-to-1, your trailing stop moves down to break even. Now, when market structure continues in its merry way, in the way that you thought it was to make you that 10R return, what you did was place an order in the market, which told the market to get you out with a break even before you took your profit. Backtest it. Yeah, do the boot camp. You'll find out, Hussein. Sorry, I misspelt your name. Oh, right, sorry. I'm talking about someone else. Euro US dollar looking good for upcoming potential shorts. Don't know. Long. Well, actually, I would be looking for longs on the euro based on fundamentals, but today is CPI, so this thing could go any way you like today. Again, you've just kind of explained there, Real Talk Mafia. Sorry, somebody just BT subscribed. Sorry, I missed you. That was half an hour ago. Whoops. So yeah, good place to take shorts. If you are a daily chart trader and you're trading a breakout strategy, yes, this is a good place to take shorts. Because that is the current range. Yeah. So yes, it's a good place to take shorts if you are a daily breakout trader. And there's a potential for that to happen today and for the euro to collapse against this US dollar. For that to happen, the US dollar has to have really high inflation numbers come out today, which makes the US dollar massively bullish and puts more more premise on them increasing their interest rates. However, the euro have said that they are going to increase their interest rates, and their inflation is too high and not coming down fast enough. So there's much more probability that the interest rates in Europe are going to rise higher than the US dollars, which would make this a bullish currency pair, as it has been for the last, going back to 15th of March, the last 2 months. So yeah, it's a good place for a short breakout. But 80% of breakouts become false breakouts and fail. So for me personally, I would be looking to long it because we're at the lows of the range with fundamentals pointing to the upside. But if you're right or wrong, doesn't matter. So if you take a breakout short now, today, and you put your stop loss there and it does that, you'll get stopped out. If I take a short here today, what I will do is when we get to these propulsion gaps, add a second position and wait for the market structure to pull back and exit my position with a profit. So it doesn't matter whether you go long or you go short. There's a 50-50 chance of that trade going into drawdown or profit. Doesn't matter which way you press a button. Doesn't matter. You're either going to be right or wrong based on CPI figures this afternoon. But if you use a stop loss, I can guarantee you will lose money. That's all I can guarantee. Is if you put a stop in the market and say, get me out if the market goes up, it will get you out. Sounds really simple, doesn't it? And it is really simple. Go and watch the bootcamp and it'll explain exactly how it all works. It's all on the website. It's all free. It's all going along the bottom. The rest of the information in the bootcamp and live stream, blah, blah, blah. Yeah. Nick Shawn, that's it. Yeah. Nick's the guy at Mission FX. I really like Nick's stuff. He's good. But he's part of the Porsche gang. He's part of the Lamborghini crowd. He's selling a course. At the end of the day, his job is to sell a course for thousands and thousands of dollars. Yeah. Anyway, I don't have a problem with people that are teaching the right way. It's good to pay money for courses that are good, but the trouble is you don't know a course is good until you paid the money for it, and 90% of them are crap. So there you go. How do I add my different indicators on the button on the top ribbon MT4? How do you add your different indicators? You can't. You can't add indicators here. You can customize these buttons and add in bits and pieces, but you can't add indicators up there. So I was just trying to think if there was a way to do it. I don't think there is an indicators. No, there isn't an indicators. There's an indicators drop down. If you go to, yeah, I don't know. Yeah, indicators. You go to insert, you can't see it in indicators. You can insert indicators onto the chart, but just do it from here. It's much easier. Just drag, drop, done. Thanks, Lee, for being so informative. Really, there is a wealth of information. Go and watch the bootcamp. It's all in there. So there you go. That's 10 past 10. I'm going to leave it there. I was going to leave it there about an hour ago, but somebody said something and I started waffling. So, which is what I tend to do, as anybody that has been in here for any time will attest to do. US dollar CAD and New Zealand dollar, US dollar, Aussie yen, all getting close-ish to being able to close out today. Hopefully we'll get some profit bank today. But everything is in a kind of holding pattern at the moment because obviously the US dollar CPI this afternoon. So at the moment, it looks like we've got a bit of bullish movement coming into the US. However, that may well not hold. It might just, and it probably will, do something like that up until 1:30 this afternoon. So CPI is 1:30. Dependent on what numbers we get, we're either going to get a bull move, a bear move, or a whipsaw. I don't know which. One of those three things is going to happen this afternoon. So you just deal with it as and when. If you've got US dollar profit on the table, I would probably take it if you can. So with for example, on this US dollar CAD, I've got one profit, one loss just before the news. Makes sense to bank that. And then that will either go into drawdown more and you have an opportunity to add this position back on again, or that will go into profit and you will bank that as well. Win-win. Yes, you would have made more money if you'd have held that, but you would be pissed off if it went to zero, wouldn't you? So just stick that in the bank, might as well. Same with all your US dollar pairs. Up to you what you do with them, but I like to bank profit ahead of big news. I'm not going to do it with this account because the EA is managing this account. I'm letting this do this on all on auto. But any US dollar that I've got in profit, and I've got a pound US dollar in profit at the moment, that's all I've got. I'll be banking that ahead of the news. And then the other positions I've got 3 positions on pound US dollar short at the moment. 0.21% drawdown, there's nothing on it. That's what I've got on the pound US at the minute. So I've got 1, 2, 3 averages here. And as you can see, I've just been sitting sideways for 3 days. So this one here, I will bank, assuming we're around here somewhere, obviously. And then if we get a bull move on the US dollar, TP on the lot. If we get a bear move on the US dollar, I'll scale out of some of that. And then I will add another position on somewhere up here for a leg down. But at the moment, we are kind of flagging. So I don't know what's going to happen with this US today. It's a tricky call, especially with what's going on with them at the moment. Oh, hang on. Lagarde's been speaking while we've been waffling. What's Lagarde been up to? Recession isn't the baseline for 2023. We still have more ground to cover. Again, this is all bullish euro. What they're talking about with more ground to cover is getting inflation down and interest rates up. So bullish, all bullish. Which is why I think euro US dollar, even if it drops today on a US dollar rally, it's going to be temporary and it'll come back up again. Break time. Can't trade the Parliament tea time per Fidel's account calendar. Is there really news on today? I've got to look at it. Hang on. What have they got today for news? Let's have a look. Comedy calendar. Economic calendar. There we go. Where are we? The 10th, isn't it? 10th of May. Harmonized index of consumer prices we had this morning. So they are actually calling it what it is, look, today for the CPI, the consumer price index. So they are actually calling it CPI. So all the news tomorrow on the pound is all red. CPI for China at 4:30 tomorrow morning is red. Where's the one I'm really looking forward to? I can't wait until this news comes out. It's down here, wasn't it, somewhere? There it is. This is the one. This is going to be the biggest news event this month. Yeah, so you've got to prepare for this. It's likely that the world will explode if we get a negative number on this. The non-defense capital goods orders excluding aircraft. If they included aircraft in that, it would be such a different thing because that only includes battleships and tanks. But it's not aircraft. So for me, I don't know why they've got this in the calendar because they're just not including aircraft in there. So, you know, the non-defense capital goods orders is just so important to Forex currency movement. I don't know how it gets missed off of all the other calendars like Forex Factory. They just don't include it for some reason. But anyway, I'm looking forward to that one. When we get to the 26th of May, I'm going to take great pleasure in watching the market do absolutely nothing at 3:30 on that day. What the hell is that? It doesn't even appear in the calendar. Love them. Someone's going to trip up at it though, aren't they? Someone's going to fail and lose their account because they traded through the aircraft figures. Nuts. Anyway, bit of a laugh to end on. Can I use Propulsion Trader, Position Trader with my FTMO prop account, which allows 10% drawdown? Yep, you can. Trading's trading. If you know, when you're trading, yeah, if you're position trading, you have a drawdown. Your job is to control that. That's your job. A position trader's job is to control risk. Risk is drawdown. Drawdown is unrealized profit. So your job as a trader is to control your unrealized profit. If FTMOs say you can have 10% of it, that's your job. Yeah. Obviously, you don't use stop losses in position trading. Hard stops, you do scale out, but you don't use hard stops. So if the prop firms say you need a hard stop, you have to use a hard stop. You have to calculate how to do that. But if you go to the website, to the trader funding section on the website, there is a comparison of all the main prop firms there. So you can see all their rules, everything about them. You can filter it all as well. So where's stops? Stop loss required. Where are you? There. So if you go to yes, the only ones that require a stop loss are Surge Trader. I don't think they do now, do they? I thought they changed that. Might need to check that. And CTI. They're the only two prop firms that require a stop loss. Everybody else, you don't need one. Okay. Right. I'll leave it there. Anything you need, I'll be in the Telegram group. Otherwise, we'll be back at 2:20 this afternoon, and we will trade the open for New York, trade the Dow, have a look at the CPI figures, see what impact the CPI has had this afternoon, and see if we can figure out where the US dollar is going to go from now. But hopefully we'll be able to bank some this afternoon. But otherwise, anything you need, Telegram. If not, see you this afternoon or back tomorrow morning at 7:50. So have a good day. See you then.